we have Professor Jerry Hanweck. He is the chair of the Finance Department at George Mason University and a visiting scholar in the Division of Insurance and Research at the FDIC from 2000 to 2007. As a former insider at the FDIC, um, how does the process work? Let's say, for example, with WAMU and let's say JP Morgan didn't come in. So what's going to happen with the total number of depositors' money is pretty much more than the actual reserve at the FDIC?
Well, it is. Now, what happens is that the FDIC, in cooperation, in this case with the Office of Thrift Supervision, which was the chartering authority for Washington Mutual, they together, jointly, decided to close the institution, at which time it was sold to JP Morgan Chase. And JP Morgan Chase agreed to pay, I think it was $1.5 billion or so for this, and they took over the deposits and much of the assets, so that the FDIC is now not involved at all. Its reserve is untapped here. It's still the same as it was before. They don't have, the FDIC is not obligated here to pay out anything on deposits. So the takeover by JP Morgan Chase allowed the FDIC to transfer those assets and deposits and not be able and avoid paying for them.
Okay, now if there was no JP Morgan at this particular situation and WAMU just went under, how devastating would that be with the FDIC?
Well, the FDIC would then have to cover all insured deposits, and as depositors left the bank, then they would have to pay them out up to the insured limit of $100,000 per account, or $250,000 for retirement type accounts. So it's a much different thing, and that would be very taxing to the FDIC. The FDIC's reserves certainly could not cover that kind of payout on a $300 billion bank or so.
Right. Is there like a contingency plan?
Pardon?
A contingency plan for the FDIC. Some like I said, the worst case scenario, if JP Morgan didn't step in, so currently the FDIC has what, $47 billion or something?
Right. The FDIC would have to borrow from the Treasury, and that's the contingency plan, and they have an established line of credit. But still, that is, I think it's only $50 billion, so that would, too, have to become part of Congress's decision to increase that line of credit. Now, the Treasury could extend a greater line of credit temporarily, but ultimately Congress would have to pass legislation that would increase that line permanently.
Okay, great. Do you have anything more to add with what's happening right now with WAMU, JP Morgan, and FDIC?
I think this outcome is much better than I had hoped for. I thought WAMU just couldn't sell itself at all, and so fortunately this occurred.